This is Greg for Teslafaninsight, and today's focus is on something that's called the Uptick Rule and the Downtick Rule, as well as the Yellen Triage process when it comes to the economy and how that impacts Tesla. This is Greg for Teslafaninsight. Appreciate your joining us once again. We also want to thank our Patreon supporters as well as our subscribers. If you enjoy this show, please take time to like and subscribe. And if you'd like some helpful charts, trading tips, as well as video tutorials and pre-shows, please join us. So one of the things that we wanted to cover today is the fact that there's something called the Uptick Rule. So what this was is that, I guess prior to about 5 years ago, there was a long-standing SEC rule that limited shorting until there was an uptick in the value of a stock. So what then happened is that the market makers, etc., arranged for this to be canceled. And the net effect was that the Uptick Rule went away, and it further gave the market makers the ability to do the type of trading they would want to do when impacting what was going on with the economy and its stock prices. So I went to look for the Uptick Rule because what you'll notice with Tesla's stock price is we have a pattern that's been going on where in the early part of the day, particularly pre-market, and the first, let's say, 20 minutes of the day will be nicely up on the stock, and then all those gains will disappear. And it's kind of like, well, what's going on here? Is it on an uptrend or is it on a downtrend? Which one is it? And it's becoming very difficult, particularly if you're trading, to figure out what the heck is going on and how to trade what's happening. You could say what the pattern is. It seems like an up beginning and then a down, midday, and then possibly up or something like that to close out the day. But in general, there's this feeling of, oh, here we go, finally, it's going to start rising. And then the thing just sort of jumps off the building and goes into the floor. So from my vantage point, our vantage point, the look of things is that there's kind of like this, there needs to be an uptick before people can start shorting the stock some more. So can the market makers create the uptick required prior to shorting, and then they can do the shorting that they had planned on? So that's sort of the general feeling that's being given off, is that these sort of updrafts in the stock price have less to do about, hey, it's on solid footing and about to rise nicely, and more about, hey, this looks like the folks in power are finding ways to have folks sort of roll in thinking that Tesla's on a nice upward trend, and they can grab that trend, and it all of a sudden becomes a huge down, and the losses are severe. So I would say reading up on and understanding the downtick and the uptick rule can be helpful. What I'll do is try to include a screenshot of the general idea of both, because it seems as though it's big time in play right now. The other thing that we wanted to review in today's show is, I'm calling it Janet Yellen Triage of the economy, devastating many of the tech, the high-flying growth tech stocks. So in case you haven't recognized it, but you probably recognize it now, Janet Yellen happens to be perhaps the most well-prepared Treasury Secretary we've ever had. I saw her speak. We have a show, and I'll link to it, of some of the video of her at Brookings in Washington, D.C. a couple of years ago. And after hearing her, I was stunned at how capable and competent she was. One of the components of her talk was she explained that when she was head of the San Francisco Fed, the process she would do is call up a large number of entities and ask them about, like, how their businesses were going, how sales looked, et cetera, and that she was doing this on a regular basis with hundreds of companies to support what her opinions would be from her position as the head of San Francisco's Fed, as she spoke with governors for other parts of the country and jurisdictions. And so I was kind of impressed, stunned, when it was announced at that session that over the last 20 years, the number 2 person in the United States in calling how and where the economy would go was Mr. Bernanke, who had been the head of the Fed, as you know, prior to Janet Yellen getting the position. And then the number 1 person in ability to call how and where the economy was going is actually Janet Yellen. So to have her move over from the head of the Fed and then skip a presidency and then move over to the head of the Treasury seems simple, but what starts to happen here, you have one person, the person who was driving the Fed, who's now driving the Treasury, and she has the ability to look across data flow from both entities at the same time and be a part of decision making for both organizations and really help to shape the economy in a rather intense and direct way that few people in history have. Alexander Hamilton, for example, comes to mind, but this lady is definitely in an incredible position and making a huge difference. Our take on it is that when Alan Greenspan was in the slot, he had a process of Greenspan speak where he would try to say things that sounded substantive, but would hide a lot of facts that only the top economists could understand. And so we've just gotten our first case or taste of her process, and that is that 2 weeks ago she announced that there may be huge drops in asset values as we go through this period. And so she said it a week and a half ago, a lot of the economists that back up the large funds and so forth sort of heard and watched what she said. And so now we're finding an environment where the numbers don't mean the same anymore. If somebody comes out with great earnings and great growth, there's this backstop of what she was talking about. And I believe it's an important thing to note that there seems to be a process going on where there's something I call triage, where, so let's say you're in the field and a soldier has an arm blown up. Do you A, let him die because the blood would just run out, or B, apply a tourniquet? They might lose an arm or a hand, but they don't lose their lives. And so that's kind of my meaning of a triage situation. And right now, when it comes to the economy, there seems to be a process going on from the Fed and the Treasury where the way they're using monetary policy, the way they're authorizing stimulus checks, seems designed to get the country out of the COVID issues and on to solid growth in the future. But unfortunately, there may be a large number of casualties as this process goes on. And therefore, that's why I'm calling this a triage deal. So the other thing that I think is pretty obvious is that, look at the stock price of some of the best companies. Facebook comes to mind, Roku, obviously you could talk Microsoft, Apple. There are a large number of companies that are doing extremely well, but they're not getting the push in stock price from great earnings that they were 6 months or a year ago or so. And I really think all this has to do with sort of the anticipated impact of the economy assist that Treasury and the Fed have combined to deliver. So I therefore believe then that, we're in a situation where, the front page of the paper in New York Times I saw this morning was, just prices are up across the board, food, fuel, everything, as, what seems to be a very powerful economy is coming back. So I guess I would say do not be surprised if we see the stock prices of places like Tesla and other high growth stocks taking a hit here because there's an ability of a large number of people to get yield, and they're sort of anticipating how the Fed is managing the economy currently to leverage access to what this means. And therefore, there's a new set of winners in this environment. Home Depot, for example, comes to mind. Illumina comes to mind. Obviously, the COVID-related stocks come to mind, but there's a whole different group of entities that benefit for where we are. And it seems to be people who are in fields with very high yields and businesses that are growing and succeeding in this environment that push that yield out in the form of earnings to a large number of consumers. So what does all this triage mean from Janet Yellen and others? The answer is we're finding out. And I really think her, before it happened, articulating what was going to happen with the value of equities, et cetera, was kind of a powerful statement about how she's going to run business from the Treasury side of the house in this round. And I will admit that when she said it, I thought, or they said it, I'd say it was a joint statement between the Fed and the Treasury. I was kind of like, well, whatever, does it really matter given that the companies are running well, they're growing well, they're generating the earnings they're supposed to, they're paying out the dividends they're supposed to. But it turns out the answer to the declining value of equities that they predicted is actually happening. So what should we expect more of? I think that if they predicted it in round one, I think that we can anticipate similar outcomes until they change policy for obviously good reasons, namely everything is growing in a solid way, and they're therefore concerned about inflation, which they're not currently. So I wanted to kind of throw this out there because there is a new sheriff in town in the form of the new Treasury Secretary and how she works with the Fed chair. And I therefore think that we should expect some surprises about how things are working and why, and then try to make an effort to modify what we're doing to embrace what their process yields. At any rate, we'll look forward to posting more information about this, but in general, I just think it means that we just don't get the pop in the stock prices that we're accustomed to, and the folks who understand how it blends into the economy are just starting to explain how it all impacts things. But I think it's blatantly obvious that one of the impacts is, high PE growth companies are really taking a hit right now when they should just be doing great, because they were doing great during COVID previously, both the sales growth of the business, et cetera. And we're definitely seeing the opposite in places where we should see unbelievable numbers on stock prices based on how good the news is. So we definitely look forward to your constructive criticism of this. We also want to thank you for joining us today, and would request a like and subscribe if you would. And hopefully we get through this period without seeing more damage to places like Tesla on a stock price basis going forward. But given what we've seen recently, I guess I wouldn't be surprised. At any rate, by the way, we did have one of our viewers requested on our last video that we sort of review, should we see a nice pin today below 600 or 700, which I think we're seeing, which is Friday the 14th. But the question was, are we going to see a nice pop upwards on Monday? And the answer I came back with was, I kind of don't think so. And the reason is that we seem to be on a downward trajectory, driven by the fact that I really think that there's a lot of negative news out there in terms of inflation numbers, and we're being encouraged to sort of embrace them, and that it won't be that bad and can be addressed quickly when the Fed is ready. And so the answers that are coming up don't add up, and I think that what we're seeing in the stock price is a reflection of policy out there. It doesn't add up, a lot of unknowns, and therefore people tend to sort of get out and wait to see a clearing to enter rather than stay in and lose a lot of money. Any rate, I want to thank you for joining us once again. We'll now move to our health tips. The first item is, don't forget, prior to lovemaking, maximum a salad to allow blood flow to go to other extremities rather than being stomach only focused. Also wanted to encourage you to consider a 5-2 or other fasting-based diet. I also wanted to, we're going to have a show over the weekend that involves sort of biking and other things, but just the 25 legless is part of a regimen that would include probably 25 to 50 sit-ups a day, similar amounts of push-ups, but getting some weight work in as well as a way to protect your skeleton as you age. Also wanted to encourage you to consider a bit of, during the weekend, sort of nature walking or hiking, because there is a very real thing called forest bathing, where getting out there in that environment can really help mental and physical health in the process of doing so. At any rate, I think that'll cover it for today. This is Greg for Teslafaninsight. Tschüss German, au revoir French, Lihitro, Hebrew, Hoda Hafez, Farsi, Strasvice, Russian, Ni Hao Ma, Chinese, Konbanwa Japanese, Namaste Hindi, Good day, our friends in Australia, Hey Do, Swedish, and in Jamaica we say, Nuff respect, walk good man. Thanks for joining us and have a